In this video, guys, we're going to look at 5 of the biggest mistakes or most common mistakes that people do when they're constructing a solid trading plan. Stay tuned. Hey guys, welcome to Alright, so trading plan. I bang the drum a lot about the trading plan, and for good reason. You know, without a solid trading plan, you're just drifting in a huge sea with nowhere to go. And it makes perfect sense, right? You wouldn't run any business without setting up a trading plan. And I've kind of talked about this so many times on the channel, and I know a lot of you, it's resonated with a lot of you, and hopefully, you know, in fact, I know a lot of you have been spurred on to create a trading plan of your own, whether that's some huge trading plan, a small trading plan, but just some kind of focus. It's something we talk about and have accountability in. When we move to the trading team, we talk a little bit about trading plan and say, hey, next week, bring your plan, we'll review it, so there's accountability there. So it's very, very important for every trader. It's important to me, and hopefully you'll find benefit from it as well. It doesn't cost anything to do a trading plan. You sit down, sheet of A4, on your phone, whatever it may be. Anyway, one of the 5 things, guys, that are the biggest mistakes and the most common mistakes I see people when they're doing a trading plan. Number 1 is they're not specific enough. So they go and they say things like, and guys, listen, you know, hands up here, as with most of these things, I've fallen into this trap myself. And you know, it's why I kind of share these videos with you, is to hopefully you can take something from them and go, you know what, that makes perfect sense. Maybe I will avoid falling into that trap. So not being specific enough. So they say things like, stick to your stop. You know, don't move your stop. There needs to be more specificity to it. So, okay, where are you going to put your stop loss? And what does it mean by sticking to the stop? Does it mean that you will put a stop loss in with your broker and let it be filled? Does it mean that you've got it in your mind? And then, again, it depends on the kind of strategy you're trading. If you're a scalper, you probably won't have time to be putting a stop loss, and you're going to be out physically when you see the price trade. You're going to hit the execution and get out, hit the market order and get out. So you have to be more specific with it. Don't move your stop. Now, does that mean don't move it when the market comes towards it? You're moving away from it, because that makes perfect sense. Or does it mean that when the market goes in your favor, are you moving it too quickly and too tight? Be a bit more specific about how you're operating your trading plan. Another example could be, I'm going to look at the market and I'm going to analyze, I'm going to do my higher time frame analysis. Okay, a bit more specific. So when? Now, when can you look at the market? Is it going to be the morning for you? It's going to be the evening? It's going to be the weekend? How many times a week? Once a week? Twice a week? You know, what are you going to do? Are you going to look at every single stock, every single market? Are you going to narrow it down? So again, be more specific about, you know, how you're going to do things. Now, this segues nicely into number 2, which is don't put too much load onto you. In other words, don't have reams and reams of stuff to do. So specificity is good, but just adding loads of erroneous stuff to do, which is just challenging, will make you not want to stick to the plan. You know, it's the same with anything in life, guys, isn't it? If you go and say, right, I need to lose a few pounds, I need to lose stone, I want to stop smoking, I want to stop drinking, all those kind of things. If you go flat out, and why the New Year's resolutions often fail for many people is they try and do everything at once. They go, right, I'm going to go to the gym 3 times a week. I'm going to stop doing this. I'm going to stop doing this. I'm going to do this and do that. I'm going to start meditating. I'm going to start, and they're just not going to do it because it's too much. Same with the trading plan. If you've gone from no plan and you want to try and stick to a plan, then having reams and reams of checklists and stuff is just going to annoy you. You know, no matter how disciplined you are, no matter how focused you are, you're just not going to want to do it. And I get it. No one wants to do it. So you've got to start off slowly. A very small checklist to say, hey, listen, my plan is to stick to my checklist before each trading day, and to stick to my risk management rules, which are X, and to trade the markets that I have allocated, which are X, in these strategies, which are X. Done. Easy, simple, no problem at all. Third thing, guys, is you iterate the plan too often. I say you, we, again, made this mistake myself. You're making adjustments too soon. So you're running with the plan for, say, a week, and then you go, it's not working, I'm going to change it. A couple of days, it's not working, I'm going to change it. You have to say to yourself before you construct the plan, right, this is the plan that I'm going to stick to for X number of days, and often use 30 days as a good rule of thumb. In the last module in the program, talk about 30 days, and your 30-day action plan for moving forward. Because I think that even if, you know, it doesn't work out for you, sticking to something for 30 days exercises the discipline muscles and allows you to see if it's not working because of a temporary blip, or if it's something that needs to be addressed. So for example, you could say, hey, my plan is to run through this checklist before each trade. Now you might find that's too much, but it might be because you're just very, very active at the moment. Maybe throughout the latter part of the 20 days or 30 days, you can do that. And you go, right, okay, well actually, maybe every trade is too much, but I at least want to do it twice a day. I want to double check my high time frame levels. I want to double check my risk on the trades I've got. I want to double check all the things that are important to you, but maybe twice a day rather than before every trade. So, you don't have a clear picture of the load and the effort it's taking until you've had the 30 days. So adjusting and tweaking too often would be my third biggest mistake. The fourth biggest mistake is just not sticking to it for a certain period of time. If 30 days sounds like too much to you, and listen, I get it, everyone's at different levels in their trading career. Everyone's at different levels in how they're dealing with the psychology. It's baby steps. I can sit here, as can any other traders who have been in the game a while and who have experienced different types of markets and environments and good times and bad times, and go, hey, listen, you just must do this. But I get that from going from that to that, it's too much of a jump sometimes. And it's the same with anything in life. Going from being heavily overweight to having a six-pack is not an instant jump. It's a slight change. It's like maybe if you're heavily overweight, okay, well, cut out all the sugary sodas. Okay, first, now I'll start to cut out, I'll start to decrease my portion sizes. And I use the analogy with weight because I think everyone can relate to that in some way or another. With fitness and health and fitness, but same with trading. Listen, people don't stick to it because it's too much, but then it's because it's so complicated, and it's kind of a little bit of a mix and match with the prior topic we talked about. But just start with something. It doesn't have to be a huge plan, guys. If you've got no plan and the thought of sticking to a strict plan for 30 days is too daunting, then don't do that, because you won't stick to it and you'll go back to square one. Just start with the basic stuff. Be very simple, get a scrap of paper and go, I'm going to trade these 3 markets, whatever many markets it may be, 5 markets, however many markets. We're not trying to be too restrictive here, and we're going to trade these rough strategies and between these hours. There you go. And stick to that for 5 days, 10 days. Just start off with something just to put that first brick down. Because at the moment, if you've got no plan, you're flailing around, you're losing money, you're struggling, you've got nothing at all, no bricks down. Just get one small brick, put it down, and then build the next brick and the next brick. And then when you're further down the line, you can start to create bigger trading plans that are very detailed, very definite, very structured, very focused, and in different areas and different things, and you've got strategies and plans, etc. You can do that later, but just getting the ball rolling is the first big point. The fifth and final point, guys, is to the biggest challenge or biggest problem I see people doing is I see people trying to mirror other people's plans too much. But there's a big warning, as we said in one of the talks, is that that's a plan suitable for him. Yes, use it as a template to see what perhaps you should include, but your plan has got to be very much focused around you, your lifestyle, your risk tolerance, the type of trader you are, how much time you can allocate to trading, the type of trader you want to be, the type of trader, the type of markets you like to trade, what you can access, what your funds allow you to access, so many different things, your character. I mean, one of the other plans that was shared was saying, hey, listen, I love the idea of scalping, but it's just completely not going to work for me, so I'm not going to get involved in it. And he recognized that and was self-aware enough of that, and that's great. Self-awareness is a key thing. So being cautious that, okay, there's plans out there and there's ways and things, and I can tell you what I think is a great way of doing a plan, but it's all about you and customizing it to suit you. So be very mindful of that. Be very careful about, just starting it going. And here's a kind of bit of a push to you if you haven't got anything at the moment. Just start. Just write down 3 things that you're going to stick to for the next 5 days. It's a start of a plan. And that could be the markets you're trading, again, the time frame you're trading, the size you're trading, the risk you're taking. Keep it very, very minimal and just start. Get that first brick, plonk it in the ground, and you can build from it from there. Take care, guys. Keep your risk managed. See you next one. Bye-bye.